Greetings to the Red Angus Association of America. My name is Derrell Peel. I'm the Extension Livestock Marketing Specialist at Oklahoma State University, and it's my privilege to have a chance to visit with you a little bit today about the cattle market situation that we find ourselves in here as we move towards the latter part of 2020. Yeah, obviously this has been an absolutely unprecedented year with lots of challenges for the cattle industry. The first half was just a tremendous set of shocks and dynamics in the market. We've seen lots of things that we've never seen before. The good news is I think we're beginning to move past some of that. Not to say that we're out of the woods completely yet. There'll be some residual effects of what we're in. We're still in the middle of this thing anyway, from the standpoint of the human health issues of the pandemic. And obviously we have some very challenging macroeconomic conditions right now. We are in a recession in the U.S. as well as globally, and so we're going to be dealing with that in the coming months. But the cattle market itself is beginning to stabilize a little bit. I think it's way too soon probably to use the word normal yet. We're not quite sure what that means, but we will be going forward. So let's take a look at some of the major factors affecting the cattle markets here, again, as we think about the latter part of the year. One of the backdrops that I want to start with is just where we are from a forage and hay situation standpoint and feed grains. This latest Drought Monitor map shows obviously we've got tremendous drought conditions that have developed over the summer in the western half of the U.S. in particular. Some of those areas started the summer that way. You can look at the drought map from last May and see that some of the Colorado, western Kansas, southern Colorado region over towards the Four Corners has been in drought all year. Other areas have developed a little more recently and gotten severe. So we're ending the growing season here with a lot of places with limited pastures available. USDA released hay production estimates for 2020 recently. Alfalfa hay production is down about 5.9%. Other hay production, not down that much on a nationwide basis, about 1.2%, I think. But if you look at the western region of the U.S., as you might expect, both hay, alfalfa hay and other hay conditions or supplies were lower, and the rest of it's kind of scattered around the country. I think in general, for some producers, obviously, there have been enormous challenges already, and those will continue through the winter now. With limited pasture conditions, as well as, in many cases, probably limited hay supplies. And so we'll probably see some movement of cattle around, some destocking. We'll talk about it a little bit later. I don't know that we've seen a lot of net liquidation of cattle as a result of this drought, but certainly lots of challenges that are going to exist for producers as we go into the winter. If we take a quick look at where cattle markets are right now, again, you can sort of see the dynamics in the first half of the year on this calf price chart. But we're about where we were this time last year. Now we were, a little disappointed to be at this point last year. We thought the end of last year was going to be stronger than it was. We revised those expectations down. We started this year with stronger price expectations for feeder cattle and fed cattle, and we've obviously had to revise those down a little bit. But we have kind of gotten back to where we were, and I'll talk about the price forecast a little bit more towards the end of this presentation. But there's some reason to have some optimism as we go through some of the basic supply factors in particular, and we'll talk a little bit about the demand situation as well. Feeder cattle market, it's a little more obvious here after the shocks of the second quarter in particular that we have seen a little bit of recovery in these markets, kind of a slow grind through the summer. We're going to drop off a little bit going into the fall. Most of that's kind of seasonal. In fact, if we often pay a lot of attention to those seasonal patterns for different classes of cattle, and they do vary. Calves have a different seasonal pattern than the bigger feeder cattle and the fed cattle, and even in the box beef and the meat markets. And so we haven't seen a lot of normal seasonal behavior because of the shocks related to COVID-19. But I think as we go forward, we are more likely to see, or at least begin to see, those seasonal tendencies express themselves a little bit more. And that should make it a little bit easier for us to anticipate kind of what's going on in these markets. The fed cattle prices, here's a Southern Plains chart. The 5-market chart would look very similar as well. Tremendous volatility, ups and downs in this market, again, dealing with all of the issues related to the shutdown in the second quarter, the challenges on the food supply chains that we had through that. And then, of course, we created a backlog of fed cattle that we've been dealing with through the summer and into the fall. And I'll talk a little bit more about that here in just a minute. But we've seen over the last, 6 months to 6 weeks, a significant recovery. Now it's back off in the last week or two. But in general, we've seen somewhat stronger markets build over that period. And again, we'll talk about that relative to where we expect to go going forward. Box beef market, again, a tremendous spike up as a result of reduced production of beef temporarily in April and May, followed by a similar kind of decline, back down to sort of the underlying market levels, if you will, once we got through the worst of those short-term supply dynamics. And we find ourselves now with box beef prices at or a little bit below where we were this time last year. Again, and we're actually putting more meat on the market. So we'll talk about beef production in a little bit and put that in the context of beef demand going forward. So again, whatever happened in April and May was a tremendous shock. We've never seen anything like that. We came right back down, and we're sort of moving forward again with a little more, a kind of an, I was going to say normal, I think that's a strong word, typical kind of a tendency at least as we go forward from this point. Cull-cow market, to kind of round out the market summaries here, was generally strong through the middle of the year. We actually had prices that were above year-earlier levels through much of the latter part of the second quarter and through the third quarter. We've started to see them tail off a little bit. Of course, cull-cow markets have a fairly pronounced seasonal tendency, and I certainly would expect that to happen. We'll go to a seasonal low here in early November, as we do the bulk of our, cow culling nationwide during that time period. So again, it looks like we're beginning to see a little more seasonal kind of a tendency in these markets. The big picture, if you look at the July 1 cattle inventory report, would suggest that, cattle numbers actually peaked in 2019. You remember the January 1 report showed beef cows were down less than 1%. We see the same thing again in July. The idea that we are sort of slowly sliding into smaller numbers. It's not a pronounced liquidation. I don't think this is a really sharp peak in a cattle cycle sense. I think we're kind of sliding off of those peak numbers in 2019. It's really still more of a plateau in my view, but it's a tilted plateau. We are getting a little bit smaller. The beef replacement heifer number in the July 1 report was unchanged from a year ago. Again, suggesting no major changes happening here. We're not trying to grow, definitely, but I don't think we're actively trying to really liquidate either at this point in time. We'll watch cull-cow slaughter in particular in the last part of the year, and that may give us a little bit better clue of what we're trying to do this year. But I really expect that we'll see just fractionally smaller beef cow supplies as we go into the beginning of 2021. We're kind of working through the peak of the feeder cattle pipeline now, coming out of the big calf crops from the cyclical expansion. 2019, again, was the biggest beef cow herd, so those calves hit the ground. They're working their way through the system right now, and as we go forward over the next 6 months plus, we should begin to see feeder cattle supplies tighten up. We'll begin to pull down these feedlot inventories a little bit. The projections for the 2020 calf crop at the bottom of this table shows that, again, we're expecting a fractionally smaller calf crop here in 2020. That will be the feeder supplies that we're working on in 2021 and a little bit beyond there. We look at the feedlot situation. Again, the dynamics in the first half of the year, we're still working kind of through the residual impacts of that. We can see the tremendous drop in marketings in April and May. The slaughter plants closed down and severely cut back on slaughter. We'll see the slaughter numbers in just a minute, but obviously we did not have a place to go with those cattle. The one good thing that was for the beef industry relative to, say, the pork industry is that we did not have to depopulate those cattle. So we didn't take the full value of those cattle as a loss, but obviously we created a backlog, which has added cost and been a tremendous challenge for the industry in the subsequent time, trying to work our way through that backlog of cattle that we built up in April and May. And, I think we're going to see or what I'm seeing right now, I should say, is that we're probably very close to cleaned up on that backlog of cattle. You know, placements, if you look at those, actually the shock started in March. And so these March and April placement levels were way below a year ago levels. They bounced back in May, June, and July. But again, those cattle that we didn't place in March and April were still out there. They've stayed in the country. They've been coming in since then. We had fairly big July placements. And we're probably still working our way through some of those cattle yet to show up in the feedlot completely. The other thing that happens, though, is those low placements in March and April ship those cattle ahead by roughly 6 months to when they would come out of the feedlot. That means right now, basically, we're seeing a little bit of a smaller supply of finished cattle from the new cattle. So we may still be working through the tail end of the backlog of cattle that we carried over from April and May, but we have less new cattle, if you will, coming through the system right now, and that's what's allowing us to get caught up at the current slaughter levels. I think we're very close to that level. The data is not perfect on that, at least not initially, and so, but the indications I get from the industry that I talk to would suggest that we're very close to being cleaned up on that backlog of fed cattle. So the feedlot inventories, again, they dropped in April and May because we had the tremendous drop in placements in March and April, and then bounced back to sort of year-ago levels in June, July, and as of August 1st, we were about 2% above a year ago. So again, we're still working on this kind of cyclical peak in numbers, if you will, or plateau, but we'll begin to see that over the next 6+ months and beyond. We'll begin to work our way into somewhat lower pipeline supplies of cattle, and just generally being able to draw down these cattle on feed inventories as we go. Certainly into 2021, we'll begin to see that impact a little more clearly. One of the ways we kind of look at that backlog of cattle that happened after April and May was the buildup in a calculated number that we do on the number of cattle on feed over 120 days. It did spike up. We had a very big peak in June there. You can see we brought it down in July and August. And again, I think by the time we get the next cattle on feed report here in September, we'll probably see that bulge is largely gone away. Now, there's a couple things going to add to this. It's not all just cattle that were backed up, if you will, or not current. You can also see this number get bigger when you place lightweight cattle that are just going to be on feed for more days. And certainly there was some of that. We have some of the early placements in the first quarter of the year were actually pretty lightweight cattle. And so some of what's in here is just those cattle that stay out there on feed longer in the normal course of finishing those lighter weight placements. Steer slaughter, for example, you could look at heifer slaughter, you'd see the same basic picture. Again, tremendous disruptions. The last week of April, the first day or two of May was the worst week, when we lost, almost 40% of our slaughter capacity. It got worse through April and bottomed there in late April, and then got better through May. And by the end of May, we were back pretty close to year-ago levels, and that's where we've been since then. So a tremendous shock. It's actually was somewhat surprising how quickly we did recover. I think it's a testament to the industry and the challenging conditions there that we were able to get that back to sort of year-ago levels. So we've been running most of the time 1 to 1.5% below year-ago levels. And of course, we're comparing to a year ago, but before any of this happened, I don't know that we were expecting to be quite at year-ago levels by this point in time anyway. So we've been again, moving through these cattle and getting more current in terms of the feedlot situation by moving those cattle that we've been sort of rolling ahead for many weeks now, but we're nearly to the end of those, and they're just about taken care of. You think about slaughter, well, here's the breakdown of all the cattle slaughter. So for the year to date through mid-August, we're down about 4.2%. Steers and heifers a little bit more than that. Dairy cow slaughter has been down, but beef cow slaughter is running currently 3+% above a year ago. Again, I don't think that's indicative of net liquidation. And in fact, if you look at the last 4 weeks or so, beef cow slaughter is actually just almost unchanged or perhaps fractionally lower. So we'll see again what happens in the fourth quarter, which is when our big cow culling month is. We'll watch this cattle slaughter or this beef cow slaughter I think we'll find that it comes down pretty close to year-ago levels, which would suggest, again, that we're not really trying to liquidate in any massive way. I don't think the drought has contributed significant numbers to net cow culling. I just think it's probably created a lot of issues in the regions where it's most severe and most prolonged, where we've had to manage around, destock some of those pastures, move cattle around, and so on. All of those things that add costs to the producers involved probably hasn't had a lot of overall market impacts, though, as a result of that. In addition to slaughter, of course, total beef production depends on slaughter times carcass weights. We started the year with carcass weights running close to 20 pounds above a year ago. And then as we backed up cattle in April and May, we did not see the normal seasonal decline in carcass weights. There were times there where we were 50 pounds above year-ago levels with a very slight decline instead of a more pronounced seasonal decline. And then, of course, now we are kind of closing the gap. We're still running about 20 pounds above a year ago. And at this point, it sort of looks like we're going to stay there through the end of the year. We're going up seasonally this time of the year. We always go up to a peak in late October or in November, and we'll probably do that again. We don't quite know what the level of that peak will be at this point. Could be pretty close to a record level if we continue to maintain this, sort of year-over-year increase that we're seeing. And that's probably a continuation of a long-term trend that's been there for 50-plus years of carcass weights generally increasing, at least as a general trend. Total beef production then, slaughter times carcass weights. Again, we had the severe disruptions in the second quarter, but we've been running above year-ago levels now for many weeks since going into July, late June. And we'll finish out the year with beef production higher on a year-over-year level. So, we had a first quarter that was way above year-earlier levels. We had a second quarter that was way below year-earlier levels. We're going to be somewhat above for the rest of the year. And when you average it all out, we're going to wind up pretty close to where we thought we would be on an annual basis, even at the beginning of the year. Before COVID became an issue, our expectations were for beef production to set another new record this year, and we're on track to do that. This table has a lot of numbers, but if you look at these kind of orangey bars in the middle, 2020 beef production estimates about 27.4 billion pounds. That would be another record level. And this will probably be the cyclical or the record level for the foreseeable future, because it should start to decline after 2020. But we're going to end up producing about the same amount of beef we thought. We're just doing it in a very different pattern within the year as a result of all of these disruptions. If you think about beef demand for a minute, we've got a lot of beef on the market. That's what this tells us. We also have record level pork production and broiler production. Total meat production is a record level. So there's lots of meat around, and that's always a concern from a demand standpoint. And then when you add to that the recession, the level of unemployment we've got, actually beef demand, in my view, has been remarkably resilient through all of this. And I think part of that is the fact that despite the recession, despite the level of unemployment, we've had lots of unemployment benefits, stimulus benefits to help consumers. And we had these tremendous disruptions in the food service side of the supply chain, really challenged the grocery, the retail side to take on all of that food demand, not just meat or beef, but really all food demand. And despite all of those challenges, beef demand has come through this remarkably resilient from the standpoint of the level of consumption as well as the price levels that we've been able to maintain. I do have some concern going forward if we run out of unemployment benefits, if we do not get another stimulus package put together. At some point in time, then these recessionary pressures will probably be a little bit stronger in the fourth quarter or into next year. So I'm watching that, and that could take a little bit bigger toll on beef demand at that point in time. It's not for sure at this point. Again, we've done remarkably well, and we may continue to do well. But I think there's probably more risk going forward relative to that than there has been up to this point. So, again, we've got all those issues. We'll talk about the trade side, obviously, which is part of our total demand picture as well in just a few minutes. Oh, right now, actually. So, beef exports, again, severely disrupted in May and June, largely because we just didn't have the product. We didn't make it with the packing plant disruptions that we had. So exports dropped, sharply in May and June, but we just got the July data, and it shows a remarkable recovery in that. We're still down year over year in July, but I think it's just a process of taking some time. It looks like now most of our major markets are recovering pretty well, and that we'll see. So we look at those major markets. Japan is our biggest market. It did drop sharply, but it bounced back. South Korea is actually the second largest market, and same sort of story there. Mexico is the one that concerns me the most. It is one of our biggest, 5 biggest export markets, and the conditions there are more severe. The economic recession there is more severe, but it does look like they also recovered significantly in July, perhaps a little better than I would have expected. Hong Kong is still reported as separate data, and it's been down this year, although it did bounce back a little bit, I believe, in the most recent data. And of course, the one that's not on here, that's not a major export market yet, is mainland China. It's a growing market. In fact, it's grown to new record levels in the last couple of months, but they're still very small from a beef standpoint. About 2.5% of our exports are going to China right now, which is pretty close to twice what they were a year ago, but it's still a small level. So that's a longer term market. I think it's going to be a very important market for us going forward, but and it's helping right now, but it's still helping in a relatively small way at this point in time. Of course, China is buying tremendous amounts of pork from the US and other countries around the world. And they've actually bought broiler meat this year for the first time. It really started in late 2019. And so they've become a significant broiler market, export market for us as well. So this trade situation, we'll look at the import side. We did see a somewhat surprising spike in beef imports in July. I think that was a residual effect of the disruptions in really going back to April and May. There were shortages of product on a temporary basis, and I suspect that precipitated some additional demands. And there's also things going on the other end of these markets. Australia is in a unique situation. We're still not importing as much as we have in the past from them because of their current rebuilding situation and so on. But for Australia and New Zealand, who have been sending a tremendous amount of product to China in recent years, they've got some political tensions now, some disruptions in those flows. And one of the bigger increases in the month of July contributing to that spike was a sharp increase in imports from New Zealand. I do not expect that spike to persist. I think it's a very short-lived phenomenon. We'll drop back down to more typical levels. We're probably going to end the year with everything we've been through, with exports a little bit lower than last year and lower than we expected earlier, and imports probably a little bit higher than last year and a little bit higher than we earlier expected, but not vastly different. And we look for both of those to kind of switch next year. At this point in time, the way it looks, we'll see at least modest export growth year over year in 2021, and probably some decrease in beef imports going forward. Recognizing, of course, that our cattle numbers are going to start to get a little bit tighter, and that's going to create some additional opportunities, particularly for the imports in terms of processing type beef, which will begin to decline in total supplies as we go forward. So if you look at a really long-term annual basis, we're right here now having revised our expectations down for 2020 with lower calf prices, lower feeder cattle prices, and lower fed cattle prices. But going forward, these forecasts for the next 2 years would suggest significant recovery in these markets. And again, on the supply side, that's driven by some modest support for maintaining to pushing prices slightly higher on their own. The supply effect is not a tremendous push up on prices, but it is certainly supportive as we go forward. This is really predicated on the idea that we sort of recover demand both domestically, or maintain demand, I should say, and domestically, that we continue to see the global demand from an export standpoint. I think the biggest question mark there is just how vulnerable we are to changes in that perspective going forward. Again, the pandemic is not over, and so there's potential for some additional issues there. that could jump back up in a bigger way. We do have recession issues to deal with in the U.S. and globally. Unless they turn into worse than what they appear right now, this forecast would be consistent with our expectations right now. But I think you have to really keep an eye on those external factors. The beef industry internally is kind of back on track. Most of the markets are kind of in relative balance to one another at this point in time. The fact that we're going to have ample feed grain supplies is going to help maintain or temper cost of gain in the feedlots. That's going to be supportive to our feeder cattle markets in general as we go forward. So there's reason to have some optimism, but also recognize that there's a fair amount, even a bigger than normal amount of uncertainty going forward. Just a quick look at a little breakdown in those numbers. Again, there's a lot of numbers on these tables, but here for the end of 2020, the fourth quarter, we've got calf prices fractionally higher than a year ago. Feeder cattle prices still a little bit below a year ago, as well as fed cattle. And so you can sort of see where we end up for the year, obviously down, given everything we've been through, and slowly recovering, but not quite there yet. For 2021, on an annual basis, we're looking at probably 6 to 10% increases in prices kind of across the board from the lighter weight calves through the feeder cattle markets and into the fed cattle markets, and about that much again in 2022 at this point in time. Obviously, these forecasts will get revised as we go forward and get additional information. So this is kind of the way it looks right now, but it certainly is subject to change, and we have to pay attention to those external factors that are just so uncertain right now. With that, I'm going to stop here. I will share with you my email address. If you have any interest in following up with me, feel free to contact me. I do write a weekly newsletter along with one of my colleagues from Animal Science. It's a free newsletter. We put out 2 short articles a week, typically one on markets and economics that I write, and one on production topics that Glenn Selk writes. And if you're interested in getting that, we'd be happy to send that to you. You can just send me an email and ask me to put you on the newsletter list. It's something that we offer to anybody that's interested, and we'd be happy to share that with you if that's of any help. With that, thank you for the opportunity to be at least a virtual part of your convention this year. Thank you.